Hey guys, welcome to this week's drop. Thanks for watching. I think it's been about 3 weeks since I've been able to do this. I've had an extremely busy last few weeks. Just to recap, over the last weeks, I've spoken at Charlie Shrem's Crypto IQ event, which was held within the World Blockchain Week in Vegas. That was a couple weeks back. That was great. Pretty small event, starting off before the conference was really going. But it was awesome to talk to just crypto traders and hedge fund folks and put those that are in the game, both from a product perspective, releasing products that are good for traders, as well as regular run-of-the-mill crypto holders. And got a few nice talks on trading crypto. And I sat on a panel myself and discussed what we see in the crypto market at this point in time. And about a week ago, I was at Vegas again for the Money Show. The Money Show, of course, is a conference I do several times a week. And in that one, one thing that's noted about that conference, those conferences, is that there tend to be retail traders a lot less interested in crypto. And I always ask the audience, are you in crypto, or are you just here to see what I have to say? And generally about 30% raise their hand. So really not much exposure from the general retail out there still, even though we've had a very strong 2019. This bull run is probably not over. And I would say that the lack of interest suggests that they can keep piling in when they finally see that we're about to break to new highs and give this a real serious run. So, as always, sell when people are all in and buy when people are nervous. And I would say in general, at least the general retailer is nervous for sure about crypto and not ready to jump in. So without further ado, I apologize for that last few weeks. I was not feeling well and busy, but here I am. And it was really nice that the market has not moved for us during that 3 weeks. Well, nice for me catching you guys up, but not so nice if you're trading this daily like I am. Let's take a look. We have that strong run-up, which had me suggest that likely we had that truncated bottom. It's about 7,300 in Bitcoin, and again, ideally I would have liked one more low. The fact that we didn't get that low is a little bit of a warning for myself as an Elliott Wave analyst. But I'm going to treat this like a bottom until I see it come off the rails. That's always a name in the game for me. If something looks like a bottom, smells like a bottom, and it is a bottom. And then if we start to break some support, well, then we need to think differently. Right now, there's a chance that we bottomed yesterday, but I really don't think so. I would give this a chance for another low. Around 8,300 is at least the next shot. I don't know if that will present a bottom, but what I can say is if we don't strike a bottom there, we're likely to go into the very key support of 7,850. So I'm watching here, and the first sign for me is an impulsive move through 9,000. That would be, and there's a bunch of reasons why that's a key level to me. Both some of the swing areas, the places where prices were rejected in this move down, but also it's a key fib level that pushes us into 10,000 next. Which would be probably the first wave of this third, which I don't have it labeled, should hit around that 10K region, maybe a little bit lower. So that's what I'm looking for. Again, 9,000 through that is a signal of a bottom. That will lower as we go lower, but that's what I'm looking at right now. I see some very nice divergent text. I mean, you could see that this A wave of the WXY, if that's the count we have, was strong technically, and then we started to lose momentum, and that's a really good sign that this downside is starting to move momentum. Of course, some people love those wedge patterns, and that's what we're looking at right now. I don't know if this wedge will hold. I mean, wedges are tricky because sometimes you can blow through the bottom and turn it into not a wedge, but often when price breaks out of a wedging configuration, it's not really officially an Elliott Wave pattern, but basic technicals, you often get a strong move. So watching that as well, and you can see these, 9,000 is roughly just above this first rejection candle right there, this most recent one. We have another one at 9,000 here, or a little bit lower, 9,000. We have a big cluster here at 9,000. So it's one reason I just see this as key to reversing this little downtrend that we have. But anyway, so that's really not much to say. That's actually all I have this week. I'm personally ready for this to chop a bit more, but got long in this area, and certainly if we're 8,300 and down at 7,850, where my final stop is, or at least if it gets sustained below that, I'll be adding. So, I'm not going to maximize until we get really deep into support or start to break out and start to create an impulsive pattern above. So anyway, that's what I've got this week. Like I said, market hasn't done much for those 3 weeks that I've been busy, but in the end of the day, I see this as bullish consolidation over a potential bottom of our wave 2. So we'll see what happens in the next week, 2 weeks. We should see something, and we'll talk to you guys then. Bye.